The appetite from investors appears to be rising, so the surveys, there's various surveys, one of which we have done about investor preferences, would suggest that there's more capital trying to get into residential, and there's a couple of reasons for that. The investors are increasingly confident in terms of how to operate and run and own these things over long periods of time. They're starting to realise that the income streams can be very stable. They're not technically secure because of course the tenants can move, but they're very confident because of the demand supply imbalances that the income will be there. So that's one side, people are more comfortable. The other side, of course, is the volume of negative yielding debt. So because interest rates are set so low in so many places, then investors that need income, pension funds, liability matching investors, then of course they're seeing the income stream that can come, and they're starting to come from outside real estate into real estate, if that makes sense. So there's effectively a wall of capital that's sort of there and looking. Of course, there is a sort of fly in the ointment, which we've seen a little bit of this recently within Europe and beyond, which is with regard to regulation. So we've just seen this in Berlin, which has wobbled a bit around regulation, which is coming in from a very good idea, which is to try and provide houses for people who need them. But the regulation has perhaps been a bit clumsy and is now being sort of repositioned a little bit. The obvious challenge there is that if regulation comes through and is ill thought through, that could scare away this capital that actually could be part of the solution for the delivery of housing that Europe needs.